watching Business Incorporated on Channels Television. Straight now to Kenya, where the central bank has raised its benchmark rate to 10%. The Monetary Policy Committee met on 9th of June 2015 to review market developments and the outcomes of its previous monetary policy decisions. The committee noted that the decline in overall inflation in May 2015 was largely a reflection of significant decreases in the prices of a number of food items following the onset of the long rains. Let's discuss this further as Gaimin Monyane joins us from EcoBank London to take a look at this story. Gaimin, how are you today?
I'm fine, thank you.
Now, I do know it was anticipated in some quarters, but did you see the rates raise coming at all?
Well, yeah, we expected a rise, but not as much as they've done. 150 basis points is quite a lot. We expected 100 basis points. So this just underlines the challenges facing the Kenyan economy at the moment.
Now, the Central Bank of Kenya raised its benchmark interest rate for the first time in 3.5 years, lifting it by more than economics forecast. Some forecast 100 basis points, some said 50, and then the central bank went as high as 150 basis points. Can this save the shilling?
In the immediate term, we might see some slight strengthening of the shilling, but there are a lot of underlying risks at the moment. In particular, inflationary pressures remain high. There's high, and also the Kenyan shilling has been on a 4-year low. It's 7.3% year to date in terms of its weakening, and there are a lot of pressures from both sides. There's poor rains, which has affected the inflation environment, and so it's unlikely that we'll see a strong appreciation of the shilling going forward. We're more likely to see a slight appreciation now and a depreciation towards the end of the year.
Now, having brought forward its meeting in an obviously desperate but of course understandable move to salvage its currency from its lowest level against the dollar since November 2011, can we say now that the shilling or the Kenyan economy is in a safe place?
Not necessarily. For now, what this means is that they're trying to send out a signal that this could be possibly the beginning of a tightening cycle, which will be good for foreign investors who are looking for higher yields, you know, in terms of in the capital markets, in terms of government securities, and especially in anticipation that the U.S. Federal Reserve will be increasing their rate soon, possibly by the end of this year or early next year. So investors looking for higher yields might bring more of their funds into Kenya, which will help to support the Kenyan shilling. But at the same time, there are a lot of underlying risk. The government has just released its budget, which indicates a 25% rise in this coming fiscal year. So this is a source of inflationary risk, and it will also undermine the shilling. So all these factors combined together will put downside pressure on the currency going forward.
Thank you so much for your time, Monyane. Have a great day. We have been chatting to Monyane Gaimin from the EcoBank in London. Over now to Ethiopia, where the government has proposed a 223.3 billion birr budget for the fiscal year starting on July 8, up nearly 20% from the previous year to fund spending on the development. And that's about all we can take on Business Incorporated this afternoon. Many thanks for staying with us. I am Christy Cole.